India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live as always from the CNBC-TV18 Motilal Oswal studios, and it is decision time. The US elections, the American voters have put their ballots in, and those are now being counted. And over the next couple of hours, we will have the final tally and who gets to occupy the White House for the next 4 years. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning.
Hi, good morning. I think we've managed a fair bit of red, blue and white in the studio and, on ourselves in person as well. But yeah, it's that big day, and you can see the leads ahead of us. It's still pretty early, and this was always going to be a very close election. So let's wait. This is just very early trends that are coming through. But we have so much to cover. Whatever it is, I think the markets will want to hope that at least there's clarity, over the next 6 hours, this becomes clear. So the event is done, then you can move on to the next.
Well, and getting into the event, the bulls seem to have fought back. So we'll have to see how much of the good news, so to call it, has played out. So we'll wait for the result. I think Prashant tells us by 10 a.m. we should have better clarity.
Yeah, I think the markets will, there are two things. One is when will we know the result? And the second is when will markets trade the result? I think the second one, which is when will markets trade? And when I say markets trade, mostly it's Forex. It's not equities in that sense. Really, if you go back to 2020, 2016, it's currency pairs which trade. The CNH, the Mexican peso, especially if Trump comes.
Yes.
But I think markets will trade it very quickly. But we may still be, I don't know, if it's a contested election, the actual official result in terms of, the authorities, they're saying, well, this is the winner. We don't know. It may be 6 hours out, it may be 6 days out. But in any case, markets are really trading as if it's Trump 2.0. And the reason I'm saying that is because I think, the one thing you got to look at is the dollar index. And the dollar index is up about 0.75% this morning. Last night, it was down about nearly 0.4%. It's flipped higher once again, stronger, which essentially means that everything else on the other side is actually even stronger now, 0.83%. So that's, and by the way, usually I complain that it's not a correct measure to assess dollar strength because so much of the dollar index is made up by the euro. But I think today this is a good sort of measure to look at things, to assess what the market is pricing in. Because Trump 2.0 would also mean, slightly more negative for the euro region, and hence the currency perhaps should also be affected. So it's a strong move coming in on the dollar euros, which means that, the Mexican peso is down at a 2-year low. You got other currencies, the euro, which is, of course, getting crushed as well as the dollar continues to rise. But as the results keep coming in, let me quickly once again put some basic numbers. And this is the broad framework that you need to go with. And we put this out 2 days back as well. This is very simply put what you need to look at. Donald Trump needs 51 electoral votes to win, to get to 270. 270 is the halfway mark. Total electoral votes is 538. The safe seats are 219 for Donald Trump. Basically, these are seats which have always historically voted Republican. For Kamala Harris, it is 226, which is historically always voted Democrat. So, that's a starting point. And then from there to get to 270, it's 51 more for Donald Trump and it's 44 for Kamala Harris. And I think that's the basic math you need to remember without going into too many specifics, really. The reason the reason swing states become very important is because of this, because you've got a certain number of seats which are already assigned to Republicans and Democrats and then probably vote that way. So the undecided states become very important. And these are what are called swing states. And these are the ones which are up on your screen. North Carolina, Georgia. I think results are coming in from, early indications are coming in from Georgia and Trump is ahead. Arizona, Wisconsin. There is Pennsylvania, Nevada, and Michigan. Pennsylvania, of course, is the most important because it's got the most number of electoral votes, 19 electoral votes. And I think as this starts to come in, it'll become clearer and clearer. The election result becomes clearer and clearer. Okay, I'll not go too much into what happens if Trump wins or Harris wins and implications. I'll just stick to the price action from yesterday because that we will discuss when it finally actually happens. Yesterday, we saw a very sharp bounce back. And I said this yesterday as well. I think markets finally showing some potential signs of reversal. So what do we watch from here? Basically, whether the fall from the all-time highs from September is over or are we close to the bottom? So 23,800 is that level, which I think the market wants to respect. It's always, probabilities. What's the probability of the market bottoming out around these levels? I would say more than sort of 50-60% at this stage. Key resistance levels for the Nifty to take out: 24,591, which is the 20-day moving average, and 24,571, which is the 40-day moving average. And these are markers. You go step by step, and above these levels, if the market starts to trade, it is a good news. 23,816, which is the recent low, should be defended if some of this has to play out, if the market indeed has bottomed out. Nifty Bank bounced sharply higher yesterday. Actually, the bounce back from the lows was even sharper for the Nifty Bank as compared to the Nifty. Here, look for the Nifty Bank to take out the high of 52,577. And on the way down, the trendline support comes in at 50,470. So these are indications both on the upside and the downside for the Nifty Bank. GIFT Nifty will come up on your screen, giving you a sense of how we are likely to start. Absolutely flat. So, I said holding pattern yesterday in the morning, and today, this morning, it's kind of indicating nothing on it at all. Surabhi.
Oh, yes, absolutely. The bulls will really be extremely happy if they can build on yesterday's move. And if you go by what's happening in global markets and whatever the markets are pricing in right now, that big bull move is still well and truly on. Because yesterday itself, Wall Street was rallying between 1% to about 2% and the smaller caps, the broader market in the US did even better because the Russell 2000 was up about 2%, outpacing the kind of gains we saw on the Dow and the NASDAQ. In fact, just to put the last 1 month in context, it's been the story of the broader market in the US as well. The Dow has been more narrow, 0.5% gain. S&P 500 is up 1.5%. The tech move obviously has continued, 3% up on the NASDAQ. And the broader market has done even better. By the way, I was looking at Wall Street futures right now. And once again, the Russell is putting on 2%. And I think Dow futures are up another 400 points. Not just that, look at what's happening to the 10-year yield as we speak. Last I checked, I think it's crossed 4.4 if I'm not mistaken, which is a massive, massive move on rates. We'll just pull up the US 10-year if we can get it on the screen. 4.42 is what you've got. That's a 3% massive move on the yield. And I guess the bond market is also now beginning to look at a very real possibility of Mr. Trump coming back to the House. We know that, his policies are probably going to be, spiraling more deficits because there is a lot of talk of spending. And maybe that's exactly what the yield is right now representing. So big move on the dollar, like Prashant said, and an even bigger move on the yields right now. Markets across the board, positioning for that Trump sweep. Let's see if it goes that way, but that's the market mood, at least right now. Over to Asia very quickly. Even here, the color broadly is green across most of the markets. And Nikkei is surging. Japanese markets up about 2%, and you're seeing some gains across Shanghai. Hong Kong actually is cooling off. Hong Kong's down about 1%, and you know why, right? We're talking about tariff wars becoming a real possibility if Mr. Trump comes back into power, which brings me to the broad two questions which the market has. And the two questions are, will the world move away from geopolitical physical wars to tariff wars if this is a Trump sweep? That's, question number one. And if it's Harris, if somehow the U.S. manages to see its first lady president come through, then will Wall Street be able to digest the fact that taxes could move higher? Because in terms of economic policy, that's the big sort of talking point. Let's see, we'll have the answers. Just very quickly to come back to, the domestic market action. We had a lot of FPI selling reducing yesterday. Just put the numbers on the screen. The selling was less than 2,600 crores, so that was the good news. Domestic institutions are buying almost 3,000 crores. And of course, there are lots of results to go over. Titan's not that great. Berger's not that great. Reddy was in line. So we'll talk about it. And let's not forget, there is a Swiggy IPO opening out as well. So let's see if the market has the appetite for this 11,300 crore rupee issue that opens out.
Well, that's right. And yesterday's trading session was actually a good one because of a few factors. One was the institutions. Well, the net bought closed on 450 crores. That's good news. The other factors that we highlighted at the start of the series, the Nifty open interest is much lighter in comparison to the previous series. So positioning was rather light on the Nifty futures itself. And the shorts, they got squeezed out on the Nifty bank itself. So let's start off with the third point then. In yesterday's trading session, you had the Nifty that was surging away and the open interest was down by close to around 10%. So clearly there was a big short covering bounce that took place out there. And with that kind of a squeeze, the Nifty took out the 20, the 100 as well as the 50 DMA, all of them in one trading session itself. So some of those resistance levels were taken out. Well, yesterday after a while, we saw that the FIs, they added more longs than short positions and they added in the ratio of close to around 3 longs for every 1 short position. And you pull up the percentage as well, they continue to remain net short, but now the long positioning has moved up from around 22% just on Thursday, that is at the start of the series, to around 27% odd. So some higher long addition is what we have seen in the last few days. The question is, has the Nifty made a double bottom at around the 23,800 mark? Last 2 sessions, we have gone to that mark and we've seen a bit of a bounce. So the 23,800 mark is extremely crucial. There is a lot of talk that we could go down to visit that 200 DMA, which now is at around the 23,500 odd mark. So that's going to be important. If we have made a double bottom, then we need to take out the resistance levels, which comes in at around the 25,500 odd, which is very important. The 20 DMA is at that mark. And if we can get past that, then we'll be looking at life beyond the 25,000 odd mark. But for right now, the 24,550 mark is crucial. The Nifty Bank, well, it took out those crucial levels yesterday. Now the resistance becomes a support, so the 51,500 mark is important. For today's session, we'll have the weekly expiry as well that will be playing out, so we'll keep an eye out on that. And HDFC Bank, very, very important. We'll need to keep an eye out on HDFC Bank. Yesterday, it went closer to the 20 DMA as well as the 50 DMA, which comes in at around 1,690, 1,700, and from there we bounce. That could be the leader from here on if it can get past that 1,800 odd mark. MSCI rebal as well. So keep an eye out on HDFC Bank.
All right, Nigel, we will and keep an eye out on some of these cues as we look into market open at 9:15. But, well, elections, right, front and center. My colleague Parishit is now joining in. He's been watching stats which are coming in very closely. Parishit, what's the latest?
Well, if you look at Real Clear Politics, Prashant, that will give you a picture based on the present numbers that Donald Trump is leading in the Electoral College. And he is projected to win 193 seats, win by 52% of the votes. 112 in the Electoral College is where Kamala Harris is going to stand. Now, these are very early projections. We've not got news from the 7 battleground states, which will actually decide where this election race actually stands. And as we know, it's not the popular vote which will decide who wins the US election. It will be the Electoral College. The NBC News exit poll has just said that voters have listed the state of democracy, the economy as top issues as they cast ballots. Abortion and immigration were other top concerns. Speaking about abortion, the Republicans and Donald Trump are projected to win the state of Florida. Florida is a state where Republicans and Donald Trump have been increasing their lead and presence. But it is also a blow for abortion rights. Remember, there was a crucial amendment to restore abortion rights to 24 weeks in the state constitution that was also on the ballot. That has been defeated. It's a win for the Republicans there, and it is being considered a blow for restoration of abortion rights. A supermajority of 60% was needed. That's not happened. Kamala Harris, we're getting to know, is projected to win New York, also securing the state's 28 electoral votes. The control of Congress is also up for grabs, with Republicans flipping their first Senate seat. Several governor races are being decided today as well. We've been seeing Trump and his allies speak about voter fraud, allegations of rigging, large-scale cheating in Philadelphia and Pennsylvania, but none of that has been confirmed. In fact, election officials have gone on to say that this is misinformation being spread by the Trump camp.
All right, Parishit, thank you very much for that. And we'll keep coming back to you to get a sort of live state of the play as far as US elections are concerned. Well, CNBC-TV18.com has been bringing live updates from the world's most consequential elections. You can track the latest state-by-state results by clicking on the US elections tab on the CNBC-TV18 website. catch all the live action and the impact of election results on markets, commodities, bonds on our website as we see it. Well, we have Aisha Tanzim, correspondent at Voice of America, now joining us from the States with the latest. Aisha, take it away.
Thank you very much. So as you guys have been telling your viewers, this whole race is about the swing states. So let me explain to your viewers what's going on. So obviously 270 electoral votes is what they need to win. If they get their regular Democrat versus Republican, Kamala Harris gets 226, Donald Trump has 219. So this is where this is what it's all about. We are trying to figure out how she gets there and how he gets there. So let's now figure out how they get there. So if if Kamala Harris has to get to 270, these are the three states: this, Michigan, Wisconsin, Pennsylvania. This is the magic formula. If she loses any one of these states, the path to White House becomes very, very, very difficult. Pennsylvania, with its 19 electoral votes, that is the key state for either candidates. If they lose Pennsylvania, the path to White House is very difficult. Trump, though, has another path too. So if Trump wants to get to the White House, these are the four states that he can win. Right now, Georgia and North Carolina, we're expecting their results soon, in a couple of hours. As you know, whatever you're hearing now are mostly projections. The real results from the states will come in the coming hours and sometimes in days. So what a lot of media outlets are projecting is based on the voter turnout, whether it's largely in Democratic or Republican area, and the percentage of the voter turnout. So as you have seen, and this is what VOA has called, or VOA has projected, if I can get back to that state. Oh, okay. So I will explain to you as soon as I can get back to that. But what's happening is that this is regularly what Democrats win, and this is regularly what Republicans win. These states are easy to project. Every media house in US, VOA included, is saying that the toss-up states are too close to call. Even the battleground states where we are seeing results, for example, you were talking about Georgia. Yes, it is true that Trump is leading right now, but what we don't know yet is what about the remainder of the votes? And some indications are that the remainder of the votes may be coming from larger cities. And as we've seen, that larger cities sometimes vote more Democratic as opposed to rural areas. So even though Trump may be leading in one in one battleground state, and Kamala Harris may be leading in another. However, right now, the battleground states are really a toss-up. It's a razor-thin margin, which is why everyone's being super, super careful, and nobody is calling them yet. The night is young, and it is going to be a long night. What we've heard from election officials in this election cycle is
Aisha, yes, we're hearing that it could be a long night. It could be a long few days as well. But if we were to ask you about who's really coming out to vote, because we've been seeing constant appeals from Donald Trump, literally at the top of every hour, saying you need to come out and vote in big numbers. Elon Musk is saying on behalf of Donald Trump that men need to come out and vote. We've seen Kamala Harris on Twitter appealing to young voters, telling people to stay in line and vote. Clearly, this race is too close to call. Which are the demographics which will really matter to both the candidates at this juncture?
So the demographics that'll really matter. For Kamala Harris, it's women, women, women. She has been appealing to women, and she has been, and her volunteers have been knocking on doors. They knocked on millions of doors this weekend. The other demographic is Puerto Ricans, because as you know, at his closing arguments in a Madison Square rally, there was a comedian who made a comment about Puerto Rico being, a floating island of garbage, and that has offended some Puerto Ricans. So Kamala Harris is hoping that that will get her some votes. So, and obviously the blacks have been a long time constituency of Democrats. We have seen less support for Kamala Harris among young black men than we saw for Biden and for, President Obama, etc. What President Trump is trying to do is trying to get his base out, especially white men without college degree. They have been leaning towards President Trump, and if he can get his base out, he can win. And both campaigns are also trying to keep some voters in. So, for example, in Michigan, the Arab American voters, if they stay in, Kamala Harris loses. If they come out, the vote is still divided and it's going to be very close, but she has a good chance. So it's about who can you get out and who can you keep in. Both are equally important.
All right. Thanks very much, Aisha. We'll keep coming back to you. And thanks, Parikshit, for that as well. Really appreciate it. Well, let's, turn it back to the markets, right? The GIFT Nifty should come up on your screen. Take a look at what's happening. Ed Yardini, president of Yardini Research, and Arvind Sanger, managing partner at Geosphere Capital Management, are with us. Thank you very much, gentlemen. Great to have both of you here. First up, Ed, when will we know the results? And actually, let me rephrase it. When will markets be able to trade the election result? In how much time?
Well, the polls have been so close that maybe the only thing the polls have been predicting is that it's going to be so close that it'll be a few days before we know for sure. So it's hard to say, but I would say we're not going to know tonight.
Okay, but we will. You're saying that we will not know for the tonight. So we probably will have to come back. U.S. market session for us here in Asia, we'll only know later tonight.
Yeah, I think that not only are the polls close, but because they do indicate that this could be so close that it would take several days to sort it out. It may also be a contested election in the sense that there will be a lot of legal moves by both sides challenging some of the results. So I don't think we're going to be lucky enough to just have a clear signal of who's actually won here. But we are going to, I think, have a good sense of what's going on in Congress. And I think we will find that the Senate has gone Republican and the House has remained Republican. So that means that if Harris wins, she's going to have a gridlocked, divided government. If Trump wins, then we're going to have a sweep and he'll be in much better position to get his policies through.
And I guess that's exactly what the markets have reacted to. They're, beginning to trade it, I guess, in that sense, because the move that started last night on equities and what we're seeing right now in the bond market with the US 10-year at 4.4%. And again, I think futures are still saying another 400-point pop. But it is early, I think, and those leads can change. And we've seen that with our election here in India. The first hour trends were very different from the middle of the counting and by the end of it. So it could really go all over. Arvind, great to have you on. Let's talk about the market move here and now. And what do you make of it? Going by these leads, equities are rallying, bonds are falling because they're worried about higher deficits. The dollar is surging. What do you make of it all?
Well, I think the market is clearly betting on a Trump victory, because if you look at the betting markets, the probability is now moved, 75% that Trump might win. This morning before, any counting started, it was, close to 50-50, maybe slightly favoring. So I think what has happened is that if people are looking at the data closely, for instance, Virginia is a state that President Biden won by 10 percentage points, and it's much closer in this election. So a lot of different data points are suggesting that although it'll take a while to count some of the key swing states, and we may not know the final results till tomorrow, the trends are all pointing to the fact that unless there is some shocker, in some of these swing states that have yet to be counted, that the probability of Trump winning is much higher. And clearly the Senate is going to be for sure Republican. That looks like almost a done deal. And the House, I think, is probably headed that way. So I think the markets are always a probability game, and the market's already putting in a reasonably high probability that it's going to be a Trump sweep. It could be surprised. It was surprised, let's be clear, in 2016. But in 2016, by this time or a little bit later, we knew that Trump was going to pull off an upset. So for Harris to now win, it's going to take some real surprises in some of the later data. So I think the markets are going to trade today for the rest of the night in the S&P futures, and I suspect in global markets on that assumption of a Trump win.
All right, Arvind, how do you approach the Indian markets, though? Assuming that Trump comes in, the last time around, there were some issues with regard to the H-1B visa. Some rejection rates went up as well. So, at some part of the markets here, I believe that could be a bit of a headwind. We'll have to see how that plays out. While you have, other smaller sectors, solar cells, modules, you had a big amount of exports from India. How does it change, the approach to various sectors here in India, depending on who comes in the United States?
Well, Trump is more protectionist, so he is going to look for, maybe on the outsourcing or other things, try to put incentives in place for U.S. companies to outsource less, whether it's manufacturing or it's services. I think he's more focused on manufacturing, less focused on services. But there could be headwinds on that front. So I think that would be an issue. But I think his main focus is China. So India could actually benefit to the extent that he put 60% tariffs on Chinese imports as he's threatened, or a much higher number, whatever that final number ends up being, that would benefit other countries, even if he puts a across-the-board tariff across the world. I think China would be his main focus, and therefore India could be a beneficiary of that.
Well, since China will be his focus, there could be a disruption in the metals market as well. How do you see things pan out? The last time around, there were some shortages in various commodities, and that's what led to, some price spurts occasionally, but demand as well got hit. So how do you approach the metal space? Because that's going to clearly be in focus. Dollar index, some tariffs on China, and global demand as well could take a bit of a hit.
Well, it's tricky because China, 80% of the rare earth processing and supply comes from China. So China could yank the chain of, the West by turning off rare earths exports. So there are many things that are cross currents in terms of what might happen out of it. He will put tariffs on steel imports. So, Chinese steel doesn't get dumped into places like India. Does the Indian government try to protect its own steel industry? So these become, second and third order equations, which we'll have to watch how it plays out. But I think, needless to say, there will be turmoil, there will be disruption, there'll be volatility. And as investors, we have to figure out how to wend our way through that volatility. But suffice it to say, there won't be one direction for all metals. Some metals, China will have more control of supply. Some China is an exporter of, like steel, and it'll try to put, more steel out elsewhere if U.S. puts tariffs. So it'll be interesting to see how other countries react to U.S.'s actions. Do they protect their own industry?
Yeah, no, absolutely. Ed, what's your view for markets like India, emerging markets? What does a Trump win mean?
Well, we're all focusing on the elections, but I think that the markets have actually been responding more to what's going on with the U.S. economy. It's turning out to be stronger than was widely anticipated. We thought that would be the case. And we also did not expect the Fed to go by cutting the Fed funds rate by 50 instead of 25 basis points back on September 18th. When they did that, we immediately concluded that the economy might be stimulating an economy that doesn't really need to be stimulated. And the bond market seems to agree with us. September 16th, the bond yield, the 10-year, was at 3.65%. Now, as you pointed out, it's already at 4.40%. And some of it has to do with the perception that fiscal policy is going to remain excessive no matter who wins. But I think a lot of that also has to do with the fact that the economy doesn't need the Fed to keep lowering interest rates. And here on Thursday, they're widely expected to cut the Fed funds rate by 25 basis points. I think there's going to be more than one dissenter on that vote. But meanwhile, the biggest dissenter is the bond vigilantes who've pushed up bond yields here. And I think at some point, this is going to create some issues for the stock market. So I'm not sure that the stock market's going to rally much between now and year end. And I think the elections, clearly will create some volatility in the short term. But it's the U.S. economy and the Fed that I think will be critically important here in how the markets perform.
But in the very near term, Ed, to press my question, emerging markets, a Trump win, it's positive or negative for EMs and stock markets?
I think the question obviously relates to what happens to interest rates. The Fed matters a lot, and this backup in bond yields suggests that that's not good for emerging markets. The strength of the dollar is not good for emerging markets. So, and then I think the ongoing weakness in China is not good for emerging markets. And so I think overall the emerging market sector is going to underperform the U.S. stock market, maybe the European as well. But that's the way I see it. India, of course, has been an outlier in a happy way. And I agree with Arvind that, in fact, if Trump wins, they'll be focusing more on slapping tariffs on China. And I think the United States has a great interest in being a closer ally with India.
Ed, just a very quick question. I think we're already over time on the chat, but 30 seconds. Given what the bond market's doing right now, this move on the 10-year, the 2-year, 4.4%, which should get the yields back up, really, and what the bond market is telling us, with this kind of a surge in yields, you think that at 25 basis points, of course, that was always a probability for this week.
Yeah.
But do you think 50 basis points comes kind of back on the table as well? Because, I mean, before this kind of, electoral possibility, a lot of people were wondering whether the Fed has been way too aggressive. Do they even need to cut that much? But now with yields doing what they're doing, yeah, please go on.
I've been in the camp that said that the Fed doesn't need to cut interest rates. The economy is doing just fine, and I think the fact that they cut 50 basis points, and ever since then the 10-year bond yield has gone up by 70, almost 80 basis points, that suggests that the bond vigilantes are doing something you're not supposed to do. The saying is, don't fight the Fed. Well, maybe the Fed has to consider that it shouldn't be trying to fight the bond vigilantes. The message from the bond market is don't cut.
Okay. Message from the market is don't cut. The Fed's been talking about, I mean, the expectation is 25 basis points this week itself. So let's see. I think we are in for a very interesting finish to the week. The story isn't over as yet, for sure. Thank you so much, Arvind, as well as Ed, for joining in and giving us your perspective. And of course, I think we'll have to just wait a while longer because there's just too much moving right now in the markets.
Well, indeed. I'll tell you what, let's slip into a snappy break. You come back, we'll focus on all the top stocks that we're tracking for you.
Welcome back. There's so much moving. I'll just leave you with this one market sort of trigger. Keep watching the Hang Seng because that market's reacting to the possibility of a Trump win. It's down 1.5%. Otherwise, Asia is very positive. Japan is surging away, 2% higher on Japan. Anyway, we'll keep getting you all the market cues. But right now, let's talk about stocks. And there are several very important ones that you must keep on your radar as we gear up for trade. Our team is standing by with the CNBC-TV18 list of top stocks to watch. Let's start off with Titan. Mangalam, not too much sparkle?
Not too much sparkle. In fact, if you look at it, there is some sort of fear as well. It's a weak set that has come in. Profitability has been impacted by, customs duty related losses, inventory losses worth almost 300 crores. The studded ratio is down 300 basis points year on year. And there is lower demand in the solitaire segment, which may impact margins going forward as well. Just as far as the, reported numbers are concerned, ahead of that, the management's gone ahead and cut their EBITDA margin guidance as well from, 11.5% to 12.5%. to about 11 to 11.5%, though they believe they will return to that 11.5 to 12% mark, 12.5% mark in FY26 itself. The reported numbers, revenue at 13,200 crores, slightly shy of street expectations. Remember, this after the company had already given their second quarter update. EBITDA at 1133 crores, much below expectations of 1435 crores, and as a result of which net profit at 700 crores, also below poll of 990 crores. In the jewelry business, if you adjust for the bullion sales, the revenue growth has been 25.5%. And if you adjust for the one-off in inventory as well, the margins have been 11.4%, but that is a decline from 14.1%. The jewelry market share at 8%. What we need to know from the management is the sales growth in Dhanteras, structural change in margins, pace of market share growth, and most importantly, the future of studded jewelry and solitaires in a world of lab-grown diamonds.
Okay, all right. Thanks a lot for that, Mangalam. Well, let's hop across to Vinny. She's here to tell us about Dr. Reddy's. Vinny.
It's an interesting set of numbers. We could say it is mixed and largely in-line set of numbers. Revenue beat the estimates of CNBC-TV18 poll, while margins, that's where the miss came in on. Revenue growth of 16% this time, led by the growth in the India business, North America, as well as emerging markets seeing strong growth during this quarter. India growth also, when you look at it, ex of the Sanofi vaccine business, that saw a high single-digit growth. Company expects that to reach a double-digit growth. So that is something interesting to watch out for in terms of commentary. North America business, higher volumes was helping, supporting the growth for North America business, which offset the increased competition as well as price erosion that one saw in North America. Base business, that's also seen a growth coming in. Management reiterated the FY25 guidance on the expenses front, and they're looking at more acquisitions and tie-ups in the O2C business. So that is interesting to watch out for, because we've seen some of these O2C business tie-ups coming in the recent time. More of such expected by Dr. Reddy's.
Okay, all right. Thanks a lot for that. Vinny, well, let's hop across to Sonal. Sonal, tell us about GAIL.
Well, GAIL was a miss versus muted expectations. So if you compare it with the poll, the numbers looked weak. If you talk about the revenues at 32,911 crore rupees, margins came in at 11.4%. That compares with a poll of 12.3%. And profits, they were higher because there was another income which boosted PAT this time around. But even on a quarter-on-quarter basis, the numbers were lower. Revenues down 2%, EBITDA down 17%, and net profit was down 1.9%. Well, this came in on the back of lower EBIT in the gas marketing segment, which declined more than what was expected in that particular segment on a sequential basis. Gas transmission also was lower. These are the two big contributors to EBIT, and that's why seeing some red on the stock today.
All right, Sonal, thank you very much for that. Now, let's talk about Mankind Pharma and Max Healthcare. Vinny is here with details on both. Vinny, good morning.
Good morning. Both of these are expected to open up in the green. So let me first start with the Max Healthcare. Revenue grew by ahead of the estimates, while margin, there was slight bit of a miss and a contraction of 200 basis point on a year-on-year basis, mainly because the OPEX expenses this time was a bit higher. There was an 80 crore OPEX expenses due to the new units which they opened up in Lucknow, Nagpur, as well as Dwarka. But occupancy, that's seen a very good performance, 81% versus 77% last year. International patients, that's also managed to see a growth, and Max at the rate home as well as Max Lab, both of them have seen a 20% growth. ARPOB, a bit of a subduedness when you're comparing on a year-on-year basis. 76,100 is what the ARPOB is at. Mankind Pharma, also good growth in terms of revenue, 13% growth led by the consumer healthcare business as well as the export business of the company. Export side saw 57% growth, and they are expecting that to see the strong double-digit growth to continue and margins also to be in high teen levels on the export side. O2C business, strong double-digit growth that came in, and EBITDA margins of around 18 to 20% is what the expectation is at. They reiterated the FY25 EBIT margin on a normal basis as well, and expecting at 25 to 26% range. And BSV over there also, in terms of the acquisition, they said 15% growth in terms of top line for that side of the business is what the company is expecting.
Got it. Thanks for that, Vinny. Going back to Mangalam, what about Berger Paints? Mangalam, a little bit of a subdued set?
It's a subdued set, Nigel, and this was expected largely because, there was heavy rains and flooding in parts of the country, not particularly the best for, building products and paints in particular. So on a consolidated basis, the revenues just grew by 0.3%. The EBITDA actually declined by about 8%, and the net profit was down by 7.5% as well. The internal suggests that the volume growth this time around was 3.6% lower than what we saw in the first quarter itself, and there was a product price increase of 2.3% itself. What is it that the management is saying? The second half will look a lot better. The volume-value gap will decline as well. And they are targeting 7 to 8% volume growth in the third quarter itself. So while the stock opens in the red, it will be important to see whether there is buying at lower levels on hopes of better performance in the next couple of quarters.
Okay, all right, got that. Thanks for that, Mangalam. So Berger Paints also on the radar today. Let's also look at PB Fintech, which reported numbers. Yash, how were they? Good morning.
Well, good morning, Surbhi. So after last few quarters of very strong growth in the revenue now seems to be finding its feet and more normalizing. But operational performance in the second quarter is very, very strong, and hence I'm going with green on the stock. The revenue grew by 44% in the second quarter. Contribution, which is revenue minus fixed cost, that grew at 29%. Contribution margin, though, came down by 300 basis points. But look at the adjusted EBITDA and the EBITDA performance. Adjusted EBITDA grew by 3.5 times. Adjusted EBITDA in terms of margin was up by 300 basis points. EBITDA loss came down by 91%, and ARR trail revenue, that grew by 45%. That's strong operational performance, and hence green on the stock.
All right, Yash, we'll track how the stock opens up this morning. It's an interesting one with lots of action and attention. Well, Manappuram Finance is the next one we want to focus on. Vamakshi is here with details on this one. Vamakshi, good morning.
Well, good morning, Prashant. A weak set coming in from Manappuram. AUM saw an uptick of 17.4% YOY. It stood at 45,716 crores, and this is the lowest year-on-year growth that we're seeing in the last 6 quarters. Additionally, the AUM grew by 1.75% sequentially, and this is the lowest in the last 7 quarters. NII, on the other hand, saw an uptick of 17.4% YOY, came in at 1,727 crores. The provisions, however, have seen a jump of almost 13.9% sequentially. The net profit came in at 572 crores for the company, up 2% YOY and nearly 2.8% sequentially. The asset quality, however, has deteriorated, with the GNP ratio now at 2.43% as compared to 1.96% earlier, and the NNPA too has seen a bit of a rise from 1.7% to 2.15%. In fact, there's a note that came in from Morgan Stanley as well. They have an equal weight call on the counter with a target price of 170. They say that they've trimmed the FY26 and 27 EPS estimates by 1 to 2%, mainly on lower loan growth. They, however, highlight that the valuations remain cheap, but given that RBI has a ban on the MFI subsidiary of the company, they think the investor interest could take a while to return. So overall, things don't look so well for Manappuram Finance. Expect the stock to open in the red.
No, absolutely they don't. I mean, that's the 1 month decline because of the concerns that you mentioned, Vamakshi. And yeah, not a great quarter for Manappuram at all. Thank you for that. Let's move to Sudarshan. Sudarshan, so JK Tyre also joins the list of stocks not reporting very good numbers.
That's correct. That's the reason I'm going with red for JK Tyre. It was a weak set of earnings for Q2, and weakness can be attributed to 3 to 4 reasons. First is rise in material costs. It seems raw material prices have increased more than the company's expected range of 5 to 6%, and because of this, we saw gross margin falling almost 300 bips sequentially and almost 200 bips year on year. And second issue, that company is facing supply chain issue for the second consecutive quarter. And third, on the demand front, company say it was lower than expectations for both passenger vehicles and commercial vehicles. But outlook though remains positive. Company say it expects demand to improve in H2 FY25 on festive demand boost, and second, resumption of government infra spends and normalization of construction activities. So overall earnings for Q2 are weak, but outlook is positive.
All right, thanks for that, Sudarshan. Well, I'm looking at Hindustan Zinc, and that stock could open up in the red because of the OFS. The government has announced that they will sell 1.25% and another 1.25% is a green show option. So totally it could be around 2.5% that they're looking to sell. Now the floor price has been fixed at around 505, so that's where the stock could open up in the red. At the floor price, the government can garner a total of around 5,300 crore rupees. Remember, Hindustan Zinc, the float is very, very limited because between the government of India, between Vedanta as well as LIC, there's close to 97% that's stacked up between the three of them itself. Valuations are not cheap because the stock trades at around 11 to around 12.5 times EV upon EBITDA, even assuming that this year they do roughly around 17,500 crores and the next year they do closer to around 19,500 crores. So it's not cheap, but we'll have to see what kind of demand you get. In all probability, this one will go through, and expect the stock to start off in the red though.
Okay, all right. So that's the OFS coming in for Hindustan Zinc. Let's quickly recap our list of stocks to watch. Then the ones that have positive news flow around them are Dr. Reddy's, Max Healthcare, Mankind Pharma and PB Fintech, and lots of them with negative news flow today, including Titan, Gale, Berger Paints, Manappuram Finance, JK Tyre and Hindustan Zinc. All right, well, with that, let's take a very quick break. We'll come back on the other side and we'll have with us Gurmeet Chadha, Managing Partner and CIO, Complete Circle. We'll discuss a lot of these stocks and more fundamental ideas with him.
Okay, welcome back. There's 12 minutes to go for the pre-open session. We have Drew Pettit, Director, US Equity Strategy, ETF Analysis and Strategy Research at Citi. We also have Gurmeet Chadha here joining us, Managing Partner and CIO, Complete Circle. Gentlemen, great to have both of you here. Thank you very much for joining us. Drew, if I can come to you, markets are already, at least in the US, if you look at rates, the dollar, equity futures, they're all reflecting that it is Trump 2.0. Is it still early in the night out there in the US, or are markets getting a little ahead of themselves? Or you think, I mean, this is the way to go? Your sense?
So it is early. There are some key swing states in the United States that I think markets are going to have to watch throughout the night. But I would say you're right. The early indication is the markets right now, their vote seems to be for Trump. And if there's two things that I would really keep my eye on, it would be Russell 2000 index futures, which are leading even the NASDAQ and the S&P right now. And even taking a look at expectations for the VIX volatility index, which have been falling as well. So yeah, right now, markets are betting on a Trump victory. But yeah, it's still pretty early in the election night counting here in the United States.
Are they betting on a Trump victory, or are they trading a Trump victory, Drew? Small distinction,
well, but look, they are trading it right now.
Right.
Just when we look at this right now with the futures, like honestly, we've been talking about this for months now. The real big gauge and how the markets are really gauging election sentiment, it's the Russell 2000, the U.S. small caps relative to U.S. large caps. So right now we're looking at Russell 2000, the small cap index, up 3% after hours. And we're looking about at like a 1% gain for the S&P and for the NASDAQ.
Drew, hi, great to have you on the show. So a two-part question. Right now, what the market seems to be indicating is that, they're very, very happy with a Trump win if that happens. So my two-part question is this. If there is a Trump win, then does the U.S. equity market keep rallying? And the second part of my question is that if the home market is going to do so well, then do you expect emerging markets like India to get lesser attention? Because we've been dealing with this situation of a lot of foreign selling, whether that money is going to China or the U.S. Basically, foreigners are not looking at a market like India right now. Do you see that changing at all?
So a couple things. First, there's one trade in the United States that really hasn't got any attention either, and that's, well, anything except the Magnificent Seven. We've had such a concentrated market for 2 years that really strong index gain is just concentrated into a small number of companies. So if we have a Trump victory, we're a little bit skeptical if we can hold these gains, if we can sustain these valuation levels after a big pop. But what it does, it could help investors move from up cap stocks in the index to down cap and into the value side of the market. So the first part of your question, I think it helps investors move down cap and away from just the large cap, mega cap US growth trades that have worked. So second part of your question, when we've been looking at flows, it has all been about US large cap. All year, for the better part of 2 years, the flows have been going to very large core index products. I do think a Trump victory and potentially the changes around policies that can affect different sectors and how they perform, it could help us finally break away from a very concentrated flow pattern. Now, this likely could help more sector and active product flows in the United States, but even in the last couple of months, we've started to see a comeback in U.S. investors, at least, starting to buy more international exposures as they look for more opportunities.
Hi, Drew. Good morning. Good to see you in. This is Nigel on this side. From an India emerging market perspective, how do you see things shape up? You're clearly indicating that the U.S. markets could continue its run, and maybe that market gets broad-based in terms of the rally. And Trump has said that they're going to be putting duties on other countries, but particularly China. So in that sense, India is better placed. How do you see things pan out? One positive from an India market perspective is Trump has consistently been talking about keeping crude oil prices lower, which for India, it's a macro tailwind. So where is India placed?
So I think this is a little bit tricky. Right now, a lot of our work, at least from the U.S. side, has definitely been more China focused. Now, we see just in general companies with more emerging market exposure, whether it's India, whether it's China, and so on, under pressure, because the first trade I think the American market is going to put on is I just want home country assets. And then I think the next leg of the trade is we'll see the markets and investors decipher a little bit more between, well, not all tariffs and policies will be the same. So I hate to kind of answer your question this way, But in reality, you can completely be right on the policy and the effect on companies. But I think the markets are going to move very quickly, go to the broad trades, look for the US companies with US exposure. And then as we get more clarity on potential Trump tariffs, if he does go on to win tonight, then we'll start to see the market differentiating between US assets with international exposure and within international opportunities themselves.
Well put. Gurmeet, this morning I woke up and I woke up my son for school. I said, well, I'm not going to go to school till we know who the US president is. I think he overheard that the result could be delayed by a few days. So,
well, your conversations with your kids are different than mine. We're working on potty trading here.
Well, it's evolution, I think.
We've all been there, right? I mean, as Surabhi said, it's evolution. Gurmeet, what are you watching really out of this? I mean, it's a big event. It will matter maybe for a day, 2 days. But for investors who are watching this here and who can largely only sort of take exposure to Indian stocks, how to kind of sort of deal with this, and what are the implications?
So, I agree with my friend here that some of the Trump victory, if it happens, I mean, still, they say in cricket and elections, you have to wait till the last call or the last vote is counted. If it plays through, I think a lot of it is in the price. Just see the bond yields, how they moved up, see the dollar index, see the way US stocks have done over the last few trading sessions. I think some of it is in the price. Now, in the short term, dollar may strengthen a little bit more. China may be forced to do a bigger stimulus if that plays out well. And if you see China, the economic situation is not that great. It's been now 6 quarters of GDP deflation, as per the GDP deflator data by various agencies, which means the stimulus would have a short-term impact. So entire this China trade, which is sell India, buy China, which is how this correction in India started, could also reverse a little bit. I'm not saying it will completely reverse, but that entire trade will have, limited legs, at least in the medium term, so which is positive. Second, I think, as my sense is, if you see US and India, it's just been opposite. The Russell index has just gone up from 1700 levels to 2200. In India, it's the other way. The Nifty small cap index is up 4x since COVID, and it's been a small mid cap journey. In India and US, it's been the big tech and large cap, and that is why we have such low correlation between India and US markets, and that is why this asset allocation is important. I think a lot of mean reversion can happen. India probably could go towards large cap as valuations look stretched. US, as you rightly said, it could go towards more mid and small cap. But my sense is, in the medium term, I think it is positive once this is out, and more for the world. I think a stable government, maybe personally biased there. I think what the world would also want to see is this geopolitical de-escalation happening. I think the big reason for inflation, supply side issues, all of that has been high interest rates, has been these geopolitical escalations.
No, absolutely. Point taken. Gurmeet, stay with us. Drew, I think you're not going to get any sleep today, right? Tonight?
Probably not, but that's been the same for 3 years with the kids at this point.
So not because of the election.
So here's my request. Why don't you join us an hour from now? I mean, if you're still up, and we'll have a better picture, a clearer picture in terms of how the elections are going. It'd be lovely to have you back on as we sort of, track the results coming through over the next many hours. So we'll reach out.
I'll be honest with you and with a lot of your viewers. I'm not sure we're going to have much more resolved in an hour as we go through, especially with some of the really tight races in Michigan, Wisconsin, and Pennsylvania. So this might be a tomorrow conversation for all of us.
No, absolutely. So what we'll do is, once we have some of this stuff starting to come through, we'll reach out, Drew. Thank you very much for now, and sort of enjoy tracking the election and, of course, watching the markets as they trade, at least some of them right now. Gurmeet, stay with us. We're going to take a quick commercial break here. But I just want to make a quick mention for our viewers. CNBC-TV18 has been bringing live updates from the world's most consequential election. You can track the latest state-by-state results by clicking on the US election tab on CNBC-TV18 website. Catch all the live action and impact of elections on markets, commodities, bonds on our website. So check it out. Go to CNBC-TV18.com and you will find you'll find the most complete coverage in terms of what's happening out there live right now. Stay with us. We're going to take a quick commercial break here. Technical experts on the other side.
Welcome back. As promised, we have Mitesh Thakkar as well as Sudarshan Sukhani who join us to help us out with their calls on the indices. Good morning, gentlemen. Thanks a lot for joining in. Well, Mitesh, you go first. We had a good bounce yesterday. What are the levels you're tracking?
Yeah. Morning, Nigel. So I think, yesterday, once the Nifty started getting past 24,050, we were looking at possibly a test of 24,250, which nearly happened. Yesterday, I think the high for the Nifty was around 24,229 and 24,250 and then 24,450, 500 zones. So I think this bounce back with some volatility might, take us to highs of 450, 500 zones, and then we'll take it from there. So for the timing, I'm staying positive. In fact, if the market does open in the slight negative today, as the gift Nifty is indicating, we would look at, taking some or exploring some long ideas.
All right. Sudarshan, what about you? How do you approach trade?
Yeah, good morning. See, yesterday's late hour rally told us one message, gave us a message, and that was that somewhere around 23,800, 23,900, that zone, the markets are finding short-term support. Now, whether this lasts or does not last is something that the markets will tell us later. And I think they will also be influenced by world events. But as of now, today, we'll assume that a short-term low has been made. If that is so, then the trade is to be long today on the Nifty. Look for either a minor dip or a consolidation. Buy the Nifty. Your stops are 23,800. It's a wide stop, but that's the way it has to be. And focus on the bank Nifty, which has been outperforming. So both indices are available for short-term buying today.
Got it. Sudarshan, you continue. Tell us, what about the individual stocks?
Sure. See, I have an all-buy list. UPL is a buy with a stop under 550. This is belonging to a sector where other companies also in the same sector are looking up. Bharat Forge is a buying opportunity with a stop under 1410. And in the financials, M&M Financial is probably coming out of a decent correction. Consider buying it with a stop under 270. And finally, in the IT pack, Syngene is a buy with a stop under 855. So it's an all-buy list with mid-caps.
And Mitesh, your stock list?
Good morning, Surbi. I have an all-buy list as well. A buy on Bank of Baroda with a stop at 253 for targets of 269. HDFC Bank is a buy with a stop at 1740 for targets of around 1800. BEL is a conditional buy though, by about 289. Keep a stop below 284, 283 half. Look for a 300 kind of a target. And overall reality is a buy with a stop below 1978 for targets of 2050.
Okay, all right. Now that, gentlemen, thanks very much. We'll come back to you a little closer to market opening for some more ideas. By the way, that's the FADA number that's out. Total rise in retail sales about 32% year on year. But we have to remember that this was one of those rare Octobers where the Shara, Diwali, that entire 20-day period fell in between. And that's sort of really the most prime part of the festive season as well. And therefore, the bump up is a little higher. Remember, we were having this conversation with Mr. Rakesh Sharma of Bajaj Auto just yesterday. And even he was saying that if you look at Bajaj's retail numbers in October, then the gain is going to be about 30%. But then it perhaps is not an exact fair comparison because the base is different. Like I said, all the festivals fell in October this time around. Let's quickly go back to Gurmeet. And Gurmeet, stocks now, we've discussed the US election and the big picture a lot. But individual stocks, and I want to start with Titan. Now, we all know it's been a bad quarter and there's this whole debate around lab-grown diamonds. But the thing is, they say you buy great businesses, great companies when the narrative is weak, which is the case with Titan. The stock is off 15% right now. But are you convinced that this is only a short-term blip?
It is, Surbi, and we've seen it so many times. Obviously, when you trade at 80 times earnings, any miss and also lowering of guidance, I think would probably be a touch negative because this, the share of studded has dropped. from 33 to 30%. And if you actually remove the custom duty impact, the PAT is actually in line. It would be excess of 900 crores. But as I said, rich valuations, anyways, the market is unforgiving, and it's been unforgiving for some of the strongest counters. But any larger dip could be an opportunity. We have like a 40 lakh weddings due now this month and early next month. And usually this Q3 is amongst the best for these companies. So the H2 has to be a little better. Also, there are other segments now, which is the wearable segment, the smartwatch segment, and other segments are now gradually shaping well. Obviously, the jewelry does most of the heavy lifting. But I don't see any structural trends there. It's basically a miss due to margins. And I think it's also good because the gold prices are so high that there is the share of studded and share of the higher mix jewelry items tends to fall when prices go up, and it's more gold coins and other stuff. It's very obvious when gold prices go up. My sense is looks transient to me.
Okay, all right. So you are still a believer in Titan. Got that, Gurmeet. We'll try and squeeze in some more questions before the market opens if timing allows us. So just stay on. Very quickly, a conversation now with L&T. And yesterday we heard that very interesting announcement from the infrastructure giant. L&T is now all set to pick up a 21% stake for about 1,400 crore rupees in E2E Networks. Now, E2E Networks is a cloud computing solutions player, and it also counts NVIDIA as one of its key business partners. Let's talk about what the rationale and the thought process here is. We have with us Hasit B. Joshipura, advisor to the CMD, Data Center Cloud Services and Innovation Fund, L&T, joining in. Mr. Joshipura, great to have you on. And I think that's really the question on everyone's mind, a lot of your shareholders as well, why are you looking at an AI or a cloud services company, at the parent entity level? I mean, if L&T Tech was talking about it, we'd still understand. What's the rationale? And then you've picked up a small stake. You haven't bought out the whole company. So what's really the thought process?
Yeah. Hi, good morning. Thanks, Surbhi. Well, you see, I don't know whether you're aware, but one of our key initiatives has been to get into the data center business. And, we actually exist across the value chain. In that sense, we are pretty unique that we build, many of the data centers in the country with one of our businesses. We actually run data centers for some public entities, meaning as operators. And we also provide managed services through our IT services company. So in that sense, it was logical for us to get into the data center space as well. Now, 3.5 years ago, when we actually embarked on this, the demand was for co-location services. And just in a matter of 3.5 years, I think this is a very dynamic space. It's moved to demand for vanilla cloud, and from there now, as you know, the talk is all about GPU cloud and AI. And therefore, if we have to provide these services to our data center clients, it makes sense for us to have a strategic partnership. So that's the rationale, and also the rationale for it to be in our parent entity and not in the IT services.
Mr. Joshipura, good morning.
Yes.
Prashant here.
Yes,
What is the sort of revenue from data centers right now? I mean, obviously, as a percentage of overall L&T numbers, it'll be small. But what is it right now? Because you build, you operate, you manage.
Yeah. See, those are all under different businesses.
Okay.
And therefore it gets sub-served. So, for example, our buildings and factories business actually builds the data centers. The operations of the data centers are conducted by what used to be Smart World and Communication. And the IT services companies do the managed services bit. So that's difficult to tease out. But our data center business, we commenced on, first with almost like a proof of concept with a 2 megawatt space in Panvel. And now we have about 30 megawatts, which is up and running, and out of which 12 is live already near Chennai. And we're just starting to fill it. So I think by the end of this year, we will be able to share revenue numbers.
How does E2E work with NVIDIA? Because I remember when Mr. Jensen was in town, the NVIDIA CEO on stage, actually, the only company he mentioned on stage was E2E.
Yes.
What's the relationship? How do they work?
Yeah, actually, it's not just in India. When they had this meeting in the US as well, this AI meeting, even there he mentioned, when the Prime Minister was there, he mentioned that they have a partnership with E2E. So essentially what they do is they provide them preferential allotments, because currently, as you know, for the H100 and now even Blackwell, there is a long waiting list. And what E2E gets is a preferential allotment.
Hi, good morning, Mr. Joshipura. A couple of quick questions here from a stock market perspective. One is, how do you come to the valuations? Because it seems rather high. I agree, there could be tremendous potential of the business, but you're not paying top dollar, so that's point number one. And the second factor is, why not do a complete buyout?
Okay, so, well, I mean, NVIDIA has become the most valuable company. So how do you justify a valuation like that? And essentially, I mean, you know this better than I do. But when you talk about technologies which are going to sort of evolve in the future, you would really have to look at valuations in the context of the value that they're going to deliver. So that's the piece on valuation. Why 21%? Because at this stage, we are really looking at a strategic partnership. We don't want to buy out the company and integrate with us. And also, I think, to keep it at an arm's length so that they are more nimble in terms of further developments.
But in the time to come, will you look at taking a larger chunk in it, or will you keep it separate, keep it at 21%?
That's a separate discussion, and I don't want to speculate at this stage, and that's something which the board of the company will have to decide.
No, but to just press on that point, sir, we're not asking you about, whether 21 goes to 30 or 40. That I don't think you're answering right now. But is this the start of something new? Would you be looking at more such high-end AI/GPO cloud-enabled service providers and sort of build that service line in-house itself? Will we see more of this from L&T at the parent level?
Yeah, so I mean, probably this is not widely known. We have something called an innovation fund. And the purpose of that innovation fund is really to invest in startup businesses which have technologies which are evolutionary to L&T's businesses. And there we don't buy out the company. We take a small stake with a board seat, and which then allows us to participate and drive the direction of the development of the technology, as well as adopt it if necessary. And I think in that sense, this is a model which is somewhat similar to that we are doing with E2E.
All right. We'll leave it there, sir. Thank you very much. And I hope this is the first of more conversations on this as we go along. Appreciate you joining us here on CNBC-TV18 this morning. Thanks very much. Okay, that's Mr. Joshipura and the sort of data center business. And very interesting, E2E gets preferential access to NVIDIA's latest chips, including the latest Blackwell, as Mr. Joshipura said. Well, Cummins is what we want to sort of shine the spotlight on once again. Vamakshi is here with exactly that. Vamakshi, over to you.
Well, Cummins will be in focus today. The parent company actually declared its numbers as well as held a con call, and in the conference call, they said that in India they're projecting total revenue, which includes several entities, including JVs, to rise by 1% in calendar year 24. And this, they said, will primarily be driven by strong power generation demand. In quarter 3, they also added that revenue in India, including JVs, saw a decline of almost 12%, but the power generation revenue in India grew by almost 49%, and this is largely being driven by two factors. The first one being pre-buy demand for stationary power out of the CBCP4 emission regulations, and the second one being increased demand from data centers. However, it is important to note that Cummins has 7 entities in India, including 3 JVs, out of which Cummins India is the only listed one, and therefore it is very difficult to draw a direct correlation to Cummins India's power generation business sales given presence of other group entities in India. But overall, when we talk about the commentary that came through, especially on the power gen front, that is quite positive for Cummins India. In fact, there's a note from HSBC as well. They have a buy rating target price of 4,200 on Cummins, and they say that the takeaways from the parent's Q3 results are positive for Cummins India. They're expecting 50% revenue growth of a low base for the company, especially in their largest segment, that is power gen, and this in turn would drive a 21% top line expansion in the second quarter, and overall they're most constructive on Cummins India amongst their coverage. So the parent's commentary boding well for Cummins India.
All right, Vamakshi, thank you very much for that. So that is Cummins in focus. There is a few seconds to go for the pre-open, for the market open. The pre-open has left about 100 points on the table for the Nifty, and I think it's a higher start for other indices as well. So the first rates, we'll look at the indices and get to individual stocks, result reactions and other news-related impact as we always do. So first rates coming up should be 24,300 plus. It is. So around 24,300 is where the Nifty is opening up, about a quarter higher. The Bank Nifty is up about a quarter, that is 52,342. You got the mid cap index, which is up about 0.6%. And we're at about 56,540. So that's 0.75% higher for the mid-cap index. And the heat map will start to come into view for the Nifty 50 stocks in just a bit. You got 4:1 advances to decline ratio. So 1,240 stocks are higher, and you got about 360 stocks which are starting in the red. 10 stocks on the Nifty in the red. The bulk of it, I mean, actually, most of the other names are in the green as we begin this session. 60 points to begin this Wednesday morning. Shirbi.
Okay, let's look at the individual movers and shakers. By the way, I think the stock of the morning can very easily be GAIL. The numbers were below estimates, but I think the market's looking ahead at their pipeline expansion. Stock surging away about 6% higher right now. This is probably one of the best reactions we've got from the results perspective. Titan, on the other hand, is struggling. It's down about a percent and a half thereabouts on what has been a rough patch. Titan, in fact, is the poorest performer on the Nifty right now. And some of these metal stocks are cooling off after yesterday's big rally. JSW Steel, Hindalco, Tata Steel, a lot of these names on the downside. The selling continues on the consumer space. Titan is not alone. Look at Trent, Lever, ITC, a lot of these other names on the weak side of the screen as well. So what's bringing up the green end then? It's tech, and more tech. HCL Technologies, Infosys, Wipro, Tech Mahindra. So tech is having a really good morning. Then you have an element of healthcare and pharma. Apollo Hospitals is the best performing stock on the Nifty right now, 2% up. There is some buying in names like NTPC as well. NTPC, ICICI Bank, these are some of the other green parts of the market. In fact, let me complete the picture on banks. The Bank Nifty is doing better than the Nifty right now. ICICI is positive. HDFC Bank, just a 0.25% gain. And Axis is very, very flat. Axis isn't doing anything. SBI is also totally flat. So Bank Nifty, a bit indecisive. But yes, there is buying on the technology side. And there's a little bit of pharma on the top of the screen today.
Well, that's right. This renewable theme, the solar theme, they continue to move with a lot of traction. You have Premier Energies, that's up close to around 2%, putting on weight after the big run we saw yesterday. Vare Energies, that's up another 3%. Remember, yesterday it was bursting in trade. One data point that I picked up is the export of solar modules to the United States from India grew from around 600 crores in 2021. Year to date, it's already more than 10,000 crores. So clearly, that space seems to be picking up steam. And that's reflected in some of these stocks. Vare listed at around 2,400 rupees. It's already at around 3,600. It's a big move out there. Top volume movers. Afcons had a subdued listing. There was a large trade that took place. Stock has recovered. That one, in fact, has moved to the high point of the day on large volumes. MRPL as well is moving very, very well. So both those two, they're the top gainers in today's trading session. Both of them moving up. I think Hindustan Zinc on the downside because the OFS is at a sharp discount in comparison to yesterday's close price. So it's correcting. It's down close to around 7%. Titan as well is pulling back on the back of those numbers. Let's pull up Berger Paints. I think for starters, that number was more or less flattish, I think. Though the numbers appear disappointing, but I think the stock, Berger Paints, has appeared more or less flattish. So a green start.
There's also Mankind in terms of positive reactions. Mankind's holding on to a gain of about 4.5%. And by the way, PSUs, watch all the PSUs. Even yesterday, the PSU part of the market was pretty strong. And even this morning, NBCC, Ircon, Railtel. So it seems that, so plenty of green.
It is green, and it is looking pretty well bid right now. And we'll sort of have more on the indices. But 30 points, by the way, is what is left after a pretty strong start early on. But just a few other names, maybe we can. Vari, for example, is another one, right? Vari has yesterday hit 1 lakh crores in market capitalization. It's up 50% in 1 week. It's actually a week old in listed markets. So that's, by the way, with a 4% pop, it's still once again the biggest volume-led gainer. Look at that, 1 million shares traded and 1 lakh crores in market cap. So, I think it's got to be one of the fastest runs to 1 lakh crore market cap out there. GAIL, of course, Sonal is pointing out, and I think both Surabhi and Nigel highlighted that. Premier Energy, that's up about 3% again. It's a fairly recent listing. Dixon is up about 3%. CDSL is starting about 3% higher. I think we highlighted Mankind. Keynes is another one which is up about 4% or so. What else? Supreme Industries starting with a 4% pop. Many of these stocks have come off quite a bit. Supreme is a well-owned name. And from highs of about 6,500, stocks at about 4,500 right now, after this 4% pop today. Prestige Estates, Sequent Scientific, and EPAC Durables is up another 3-4%. It's been moving circuit to circuit for the last many trading sessions now. out there. So that's the broad picture as we look at things. Metals are, as Nigel also pointed out, broadly down. Nothing major, but Tata Steel, Hindustan Zinc Force, there's the offer for sale. There's Nalco, there is Vedanta, Hindalco. So these are names which are down 1.5% at this point in
just
time.
one more thing. Polycab, I recall, you had quizzed the management as well. Nimesh was telling us they could be winning a large tender. That's come about, just at pre-open. So that stock is up close to around 2%. And I think the management clarified that the margins will be pretty much in line with what they normally get.
So basically, this is for optic fiber.
Yes.
And this is they said they have a small business there. And the tenders were worth, they said, 50,000 crores.
Yeah.
And I remember asking them whether they've bid for part of it. They said, no, we bid for the entire 50,000 crores. I don't know, Nigel, if they have given out a number.
4,000.
4,000 crores is what they won.
Yeah.
Okay, so that's the order that we're talking about. We should try and have the management join us to talk more about this as we go
4,099, I got it right.
4,100.
Yeah.
Mota. Okay, so that is the Polycab optic fiber order, which Nimesh first highlighted on D Street Chatter. This is part of the BharatNet project, which we put out their stock. By the way, from those levels is still substantially higher, mind you. So some of this is in the price in that sense. Well, let's welcome in Harish Krishnan, co-CIO and head of equity at Aditya Birla Sun Life Mutual Fund. Great to have you with us here, Harish. Appreciate you joining us. Your thoughts, Harish, as you're also someone who tracks sort of global cycles closely, and you got this big event which is being sort of decided upon as we speak. It may take a few hours, but for emerging markets in India, Harish, as a CIO who manages all kinds of sort of funds and oversees a large pool of money, who's better, Trump or Harris?
Good morning, Prashant. So I think, while all eyes are on the presidential outcome in the United States, I think it's equally important to see what happens to the Senate and the House and whether we're going to see a sweep or we're going to see a divided kind of a mandate. Markets generally, prefer divided mandates because there is reasonable checks and balances and reasonable amount of policy continuity. A sweep in one side, I would think, will need a reasonable reset of expectations by various market participants. Also, over the course of the last month or so, there has been a Trump trade of sorts. So if you look at the US bond yields, which has risen quite sharply over the course of the last 30, 40 trading sessions, clearly in anticipation of the fact that there could be potentially higher fiscal deficits, and that's also played through in terms of the currency with the dollar strengthening as well. So I think a lot of these potential outcomes are already in the price. I think what is going to be the key thing to watch out is whether it's going to be a full sweep or whether it's going to be a divided mandate. And that has interesting ramifications. More clearly, we have the Chinese policymaking coming out, I think, in a day or two. They are also watching out this political outcome in the United States because there is reasonable amount of bluster that has happened during the campaigning wherein China has been called out and tariffs and sanctions have been used quite liberally by both of the candidates, and therefore the policy response and the fiscal stimulus from China is going to be keenly watched out for. So I think from an India perspective, I would rather sit and wait out this entire kind of events and then take a far more decided stance depending on all of these potential outcomes.
Yeah, that's very true. Harish, great to have you on. Good morning. I think by the same time tomorrow morning, we'll be back to discussing, okay, forget US, it's over and done. Now what's happening to our earnings, right? That's how it moves. But, we had a guest earlier on the program, a foreign guest who was making the point that irrespective of the outcome, and especially if Trump comes in, you can't take away from the fact that the first big trade is likely to be to buy home assets. US large caps, US mid and small caps, which have been ignored up until now. So if that happens, and if the US remains the preferred port of call, at least for foreign investors in the near term, then what? Because we've just coming off a really difficult October. Do you think the worst of the India correction is over?
So I think part of the reason of the correction and the severity or the ferocity of the fall that we've seen in October is potentially a catch up for that excessive build-up of market cap that we've seen, especially in the last 6 months or so. I specifically call out the last 6 months primarily because there were three key negative developments. You had an electoral verdict, which wasn't really what the market was anticipating. You had capital gains taxation being tinkered. And then you've got now 3 consecutive quarters where earnings numbers have got cut downwards. And therefore, some of the reaction is to take into account each of these 3 events. I think the point that you're referring to is that where do the flows move, especially when we have seen close to about $12-13 billion of outflow over the course of the last 20 or 25 trading odd sessions. The sense that I get is for a lot of international allocators, India is now moving to a must-own category. From a small peripheral kind of an allocation that many global allocators had, I think that India is coming onto the center stage. The only point of worry that most capital allocators always had was the excessive valuations that was there. And a lot of that froth is starting to get corrected. In fact, I pushed out a chart sometime last week, wherein, if I plot the India share of market cap, that has now come down from about 4.4% of the world market cap, which it was in, say, August, September of this year. It has come down to close to about 3.6%. As it slides, comes to say about 3.4 or 3.45, which is under 7-8% relative underperformance that India is likely to see, I think those would be extremely good levels for a lot of international allocators to come back into. So yes, in the near term, that could be some kind of a home bias. There are a lot of small caps and mid caps, as you rightly called out, Surabhi, that are quite cheap in US. But I think foreign allocators will not miss up on the chance to reload back on India should we see a reasonably sharp 5-7% relative underperformance from here as well.
Hi, Arish. Good morning and good to see you. Which is the sector, though, that has run its course, which you believe valuations are full and you'd rather take money off the table?
I think, PSUs and defense, that back, even after the moderation that we've seen in the last few quarters, I think still there's been a significant amount of monies that have been made in that whole pack over the course of the last 2-3 years. Clearly, there is earnings visibility in those spaces. I'm not saying that there could be an earnings disappointment, but when they are trading at, say, 14-15 times price to book, the margin of error is reasonably very, very small. And therefore, we think that could be one bucket that sees a reasonable amount of underperformance from here as well. I think there are pockets that are starting to emerge even in real estate, where we've seen significant kind of market cap growth over the course of the last 2-3 years. There has been reasonable amount of overheating in the form of price appreciation, especially when we think about markets like NCR or Hyderabad, etc. These micro markets have seen significant price increases. And therefore, there could be some kind of cyclical kind of a reversal of that sort. And this is again a space which has done very well. That's again a space where we would be watchful for and would want to book out or to reduce our exposures going ahead. The spaces that seem to look interesting to my mind would be, say, metals, cement. These are two ignored spaces. In fact, if I were to look at the market cap share of these sectors, you have to go back all the way to 2001 for metals and 2004 for cement to get the same kind of market cap share. So obviously, the infrastructure build out that's happening in India, I think there is going to be a reasonable amount of metals and cement that is going to be used. The real estate cycle that we are seeing, that's also going to use a lot of these basic materials. So I think that would be a space that looks to me like a dark horse sector to which monies can be allocated towards.
Look at the market go now, 130 points higher on the Nifty. So we're at about 24,350. We'll have to see, if the strength really sustains, or we'll have to I think we'll have to give it a few more hours, but it was a powerful reversal from about 23,800 yesterday, and that rebound, thankfully, is continuing as we speak. So 24,340 is where we stand at. Market breadth is very positive, and I think that is even more heartening, but it's still early. 2,000 stocks are higher, and about just under 400 stocks are trading in the red. Harish, we'll leave it there. Thank you very much for being on, and hope this is the first of many. Seeing you after a while, so, hoping that we get an opportunity to speak again and sort of expand on some of those points a little bit more. Thank you for being with us here this morning. But I think we've got the Titan management, Nigel, with us to take the conversation on results forward.
Well, that's right. Let's get straight to that then. Titan had reported a weak set of numbers for the past quarter. The profitability as well was impacted by customs duty-related losses worth around 290 crores. Lower demand in the Saltel segment as well did hurt them. We have with us Mr. Ashok Sonthalia, the CFO at Titan, who joins in. Hi, Mr. Sonthalia. Good morning, and always good to have you on the show. Well, before we get to the past quarter's numbers, tell us, how was Dhanteras? How was business if you compare it on a like-to-like basis? And what's the outlook for the jewelry revenue for the remainder of this year?
Good morning. The month gone by, the festives, have gone by. We are extremely satisfied. Not only jewelry, across categories where we operate, watches, all, they have done extremely well. And we are very happy. We are not giving a specific number on like-to-like for the festive season, but it was very good.
There's no sign of slowdown or anything of that. It was as good as you expected, right?
Yes. Yeah. Okay,
all right.
To the next part of the question, we believe Q3 should be a strong quarter from the revenue growth performance. And looks like Q4 also we are very, very optimistic. And that is where we believe H2 is going to be better in terms of revenue performance, growth performance, as well as margin performance for Titan.
Okay, and we'll want to press you a little bit more on these numbers. But I just wanted your quick comment about the lab-grown business, that's launched under Trent. Some would have imagined that it should have ideally come under Titan. And we saw that in terms of a stock market reaction as well. Titan fell while Trent went up. Your comment on it, why wasn't it put under Titan itself?
So, there is no, the way we play our categories are very different the way Trent would play. Trent is a big box retailer, West Side, and they can introduce whatever they want, whatever their consumer would try to look at it and experiment with that within that big box of West Side. And it makes complete sense for them, whatever price point they want to do. We play our approach different. We are a category guy in a way. We try to build brands. We try to create some exquisite product and then go exclusively for those products. So approach is very different, and both companies are free to pursue their strategy. I don't think there is like, if you know that West Side also sells perfume, but we sell perfume as a category and a skin brand. They also do women's bag, but we do women's bag under Earth and Fast Track brand with exclusive stores. So all those things happen. But LGD is getting more discussed compared to these categories, which is fine.
That's a very gracious response, Mr. Sonthalia, and a point very well made. Yes, you've reminded us there are lots of other categories in which there are overlaps as well. But I'll tell you why this lab-grown diamond debate is a little louder than the others, because I think what we're also trying to understand is whether there is a structural shift at play here. Now, if we look at the share of the studded business for Titan, that share has come down to, I think, 30%. That's what our colleague Mangalam points out, from 33%. Solitaires have not been doing that well. And it's a very real question, right? Especially for some of the entry level or the mid-market studded jewelry. If a customer wants to go and buy something, for daily use, now there is a very real market of lab-grown diamonds. I mean, I think so the high-end wedding purchase for the discerning customer, that obviously is a business perhaps well protected. But what about the rest of it? So give us an outlook on your studded business and whether you will look at starting a lab-grown diamond range as well to prevent customers from shifting elsewhere.
So far, Surbi, data are not supporting that hypothesis which you just spoke about. Actually, we find some pressure on the high caritas solitaire, where the customers are more discerning, they have a little bit investment orientation in mind, and the way prices have been behaving in the past, they are on sideline. They want to defer their purchase till the dust settles down and they really understand. But as far as the smaller diamond jewelry is concerned, 1 lakh to 2 lakh, 2 lakh to 5 lakh, actually we have seen very, very strong buyer growth, the studded growth. Actually, if you take out the solitaire, our studded growth has been pretty decent, high teen number in this quarter also. If you look at, say, sub 1 lakh category where Mia and Carat Lane plays, and they are largely, diamond, natural diamond player, and their strong numbers are in front of you. Actually, the secondary growth for Carat Lane was 40% plus in this quarter. Mia has also done extremely well. So far, data is not suggesting that substitution is happening. Or the customer is preferring lab-grown diamond over natural diamond. They might add some of their jewelry portfolio, and I'm not denying that. But our data suggests that customers who are coming to us, they want to be assured that they are buying natural diamonds.
So as of now, sir, from what you describe, and that's really helpful and good to know that no shift is being observed as far as your numbers go. So right now, you're not thinking of bringing lab-grown diamonds under the Tanishq fold, right? We don't get that sense from you at all right now.
We have been maintaining this, that we are very, very keen observer of this category. And this is a very, very important strategic choice for us, So we would like to talk about that when we are fully ready about that.
But will you do it, sir? Is that a thought process?
That is what, Nigel, I'm saying. We will talk about that when we are ready to talk.
But you're open to it. It's not something that you're entirely writing off right, as of now.
Examining of the category and close observing the category means that both way our steps could be.
I think Prashant and me, we are close observers when we go to the jewelry shop, right? But we don't buy anything. The BV makes all the decisions.
I have a foolproof formula for that. I don't go.
No, then you get into trouble.
But you know what? Just to complete the point, Mr. Santhalia, because all the men, including the ones sitting next to me on the table, they'll always talk about whether diamonds are a good investment or not. So just for the reference, and you mentioned that, right? Because at a solitaire level, prices have been coming down. What has been the reduction in natural diamond prices?
In the small diamond category, there has not been anything which is significant. In large carats, yes, there has been, if you look at, say, maybe 1 year, 2 year, in our setup, maybe 10%. Overall, maybe even more than that, as far as the market and industry is concerned.
Okay, so that's a fair bit on the jewelry business. Okay, let's also talk about the rest of it as well. Just give us the growth trajectory and also the margin implication, because that's the other big point. I mean, this quarter, you had to deal with the impact of the import duty cut as well. But again, this guidance revision, is it just because of the duty cut? And on a steady state basis, what is the kind of margin that you're hoping to maintain, the blended margin at the company level?
So the guidance cut is after normalizing for duty cut. We do expect that in Q3, which should be the last quarter because of July 23 impact of custom duty cut, we would expect another 280 crore of inventory loss will flow in Q3. So normalizing for that, we have said for FY25 jewelry business should deliver 11 to 11.5 compared to earlier 11.5 to 12.5 number which we had given. It is more to do with the love for gold. We always knew that Indians love gold, but now it is more pronounced, and that is what we are seeing that. And this is the product portfolio which is putting pressure on the margin. Of course, gold prices being very high, there are all sorts of competitive actions are also happening on exchange, on gold price being very tight, so people are trying to entice customers. So some of those actions, but it is more product portfolio.
Okay, all right, Mr. Sondala, very quickly, a couple of numbers before we let you go. Carrot Lane, I think it's doing margins of around 7%. I think the vision is to take it to 10%. By when? And also, if you could tell us, if you could give us studded sales as a percentage of the total mix, it had come down. Do you believe that it will hover around these levels, or do you see it get back to that 30-32% odd?
So the Carrot Lane should inch up towards 10% to my mind in 2 to 3 years time period for sure. As they gain scale, operating leverage would kick in, and I think whatever actions they are taking on their cost side of it should take them towards double digit. Okay, so that's a 2 to 3 year time frame I would put it. As far as the studded mix is concerned, yeah, in this quarter it is 30%, and I expect likely to stay there because at this point of time the preference of consumer towards gold jewelry and gold coins is far more pronounced, and it is unlikely to shift so soon. So we would keep it that way right now.
Okay, we look at a few listed companies. The smaller ones are growing quite well. Competition definitely is picking up. I think you have roughly around 8% of the market. Are you holding on to your market share? Because your vision is to get, I think, to double digits in the next few years. So are you outgrowing the industry and holding on to your market share?
We are holding on to market share as far as FY25 so far is concerned. And we still believe that our ability to keep inching up towards 10% by say FY27 is there. And largely the share is coming to organized player from unorganized. So some of the listed player or some of the data which comes in the market doesn't give you the complete picture, which is largely still unorganized sector. So I think we still believe that towards 10% journey is would happen for us.
Okay, Mr. Sondalia, pleasure listening to you, sir, and hope to speak with you again soon. Thank you very much for being here on CNBC-TV18. That's the management of Titan with perspective. Stocks down about 3% or so. Well, let's go back to Parishit now, who's looking at some of those swing states. Remember, counting is still on. It is still early hours, but trends are looking more favorable for Donald Trump. Markets, of course, have been trading Trump 2.0 for the last many weeks, and that has kind of intensified this morning again. Dollar, rates, US futures, all of those indicating. But let's look at the most important swing state of Pennsylvania, because it's got the largest number of electoral votes. Parikshit is here to tell us what's going on there. Parikshit, over to you.
You know, Pennsylvania is extremely important, and I'll just come to that in a second. But we have to speak about Iowa. Now, this was a state where Kamala Harris was projected to win just about 2 days ago by at least 3 percentage points by some of the most renowned pollsters in the US. But here we are seeing an upset, so to say. Donald Trump is projected to win in Iowa, according to the NBC poll. So the polling closed in Iowa sometime back, and Donald Trump is now projected to win in that state. Coming to Pennsylvania, as you rightly said, this is the state which has the highest number of electoral votes at 19 in the Electoral College in the battleground states. Now, this is a state where every Democrat candidate since 1948 has been winning to go to the White House. So it makes it very crucial for Kamala Harris. It remains a toss-up as of now, according to the most recent projections and polls. No clear winner here. 52% of the estimated vote has been reported. Trump is leading by 1.9-point margin in Pennsylvania. This is a very thin lead. Biden had won Pennsylvania with 50% of the votes, and Trump got 48.8% of the votes. Biden had won Philadelphia County by 81% votes in 2020. So Philadelphia County in Pennsylvania was where Biden had done the best in the last election. Trump, on the other hand, had won Pennsylvania in 2016 with a thin 0.7-point lead in 2016. Trump won 48.6% of the votes, and Clinton won 47.9%. Trump's pitch to voters in 2024 has focused on the economy, immigration and crime in Pennsylvania. Harris has promised to improve the care economy, protecting abortion rights and guarding democracy as well. So Pennsylvania, very interesting battle, and it will be the state which can finally reflect the mood of the nation.
All right, Parikshit, thank you very much for that. That's An important one as we track these US sort of election results, which are starting to come through. As I said, and I repeat, it looks like, it doesn't look like there are the chances of a blue sweep, I think, are very, very low. What about a red sweep, a Trump sweep? Markets are trying to price that in. It's possible looking at the leads that he's got in some of the swing states, but it is still early in the night out there in the US. As more votes start to come in, it's important to keep that in perspective. We'll take a quick commercial break here. We have Abhijit Roy, MD and CEO of Berger Paints, joining us to talk about second quarter results. Stay tuned.
Welcome back. Well, the numbers are still coming in as far as the US outcome is concerned. So in the meantime, we're continuing a lot of the corporate commentary. The next company on our radar is Berger Paints. Now, Berger saw a slightly soft quarter, second quarter gone by. That's because, of course, there was a heavy monsoon impact playing out across large parts of the country. But how are the trends looking like now, the festive season and beyond? We have Mr. Abhijit Roy, MD and CEO of Berger Paints, joining in. Mr. Roy, thanks very much. Hope you had a fantastic festive season from Durga Puja right up till Diwali. So tell us, how good has it been now? Q2 being sluggish is not a surprise. The bigger question is, how has Q3 shaped up, specifically the festive period?
So it was a good October. We had a good collection. In fact, slightly surprising in terms of the collection amount. So whatever material that was there in the system possibly has been sold out, and we had a minor growth in October as well. I think November, December we are well poised for a good growth.
All right. Hi Abhijit, good morning and good to see you win. Well, could you quantify that? For quarter three, should we be working with high single-digit growth and then double-digit in quarter four? Would that be a fair ask?
Yes, we expect that that's how it should be. In terms of volume, we will be around 8 to 10% possibly in quarter three, and quarter four definitely double digit because the bases are on the lower side in quarter four. And in terms of value, it will be in the high single digit in quarter three, and quarter four we are hoping that it should be double digit.
So what does that translate into when we talk about full year numbers? With a stronger second half, for full FY25, what would the volume growth be? What will be the total value growth? And maybe some idea on revenue as well.
If what we say translates into reality in quarter three, quarter four, I think we should have double-digit volume growth by the end of the year. The value growth will be slightly less because of the price decrease effect, which had bothered us right for the first 2 quarters quite a lot. There was a 5% cut last year, which we had taken. So value growth will be in single digit, mid to high single digit, and volume growth will be possibly in the double digit, definitely.
All right. Abhijit, hi, morning, Prashant here. Is there, the dominant kind of across the board paint companies and otherwise, the narrative, or the talk has been that the consumer spend is actually slowing down a little bit at the margin. Are there any indications at all? It's all relative, incremental, not in an absolute sense. Are you seeing any of that?
So, I would say there is a slight slowdown possibly, because if you look at our volume growth, overall for the first half, it's around 8%, So normally we do about 10 to 12%. So from that perspective, If you look at it, yes, there might be a slight slowdown in terms of the growth rate by about 2.5%, 3%. So that's about it. It's not a dramatic thing happening. We are more bothered by the price cut which we had taken last year by about 5%, 5 to 6% almost, and that has been bothering us, because you see a volume growth, even at 8%, our value growth remains at, 2 3%. So that's what is, impacting the paint industry more. I think, that will reverse partly in quarter 3, and, quarter 4, it will become positive. So that's why, we are quite upbeat in that quarter 4 results will be quite strong. Quarter 3 will be also much better than what we have been doing so far.
Mr. Roy, Akzo Nobel wants to sell out its India business. Would you be interested?
So, it's not clear as yet, what they are up to. It's a professional company. I'm sure, they have to make up their mind first and, come into the market with their proposal. We will take a close look at it. Nothing is ruled out. Of course, everything matters in terms of what the valuations are. Is it justified? There is a lot of synergy there, but, also there is, we have to keep in mind the valuation part of it and then, discuss and decide, whether it is worth going for or not.
The valuation that's doing the rounds, at least what we picked up, they want to be valued at anywhere between $2.5 to $3 billion, I think. I mean, it's pretty big. So I don't know, but what is a strategic war chest you would keep in mind? Even if you look at an acquisition, if not Akzo, if anything else, what's the size that Berger would be okay to digest at this point in time?
No, we have always gone for, small acquisition. We don't go for this big type mergers. We haven't done anything like this, and in this type of an opportunity hasn't come either, so difficult to comment on at this stage, because, no, but we will look at it, as and when it comes, we will look at it and closely and decide then, what is the best course of action for us. As of now, I would like to keep it at that way. Unless things are clear, it is very difficult to comment.
If it is too large, then maybe you'll have to team up with the PE or something. So we'll see how that goes. But your sense, CCI will approve it if you're interested?
Yeah, in our case, Competition Commission should not be an issue because it's very, it's a small percentage and, it doesn't impact us. It won't be monopolistic for us for sure.
And your margin outlook, you have given us 15 to 17%. There'll be an inventory impact on business in quarter 3. So it takes into account that even in quarter 3, it'll be 15 to 17%.
Well, yeah, the range is that, sometimes it goes up more towards 17, sometimes it goes down more towards, 15, 16. This quarter, it was about 15.7, 15.8. We expect that to improve in the third quarter and then further improvement should be there in the fourth quarter. So that's how I would look at it in terms of the margin.
Abhijit, we'll leave it there. Thank you very much for joining us and appreciate you coming on with that perspective. Thanks indeed. Well, I just want to highlight that AP, that is the Associated Press, which typically has called the US elections over the last many decades, they've called North Carolina for Donald Trump. They're saying that Trump has won North Carolina and this is an important swing state. I think it has about 16 electoral votes in total and he won it in 2020 as well. Even though he lost the presidential election, but he sort of took it from Biden back in 2020 as well. So that is an important state. Many were hoping, especially those who were kind of sort of betting on Kamala Harris, they were hoping that early on, because votes for North Carolina come in pretty fast, one of the fastest historically as well, and that's come through. But many were hoping that if she wins North Carolina, the path to sort of victory becomes easier. But Trump, according to Associated Press, winning North Carolina, and there's a 3 percentage point difference, by the way. So that is interesting as we look at things at this point in time. So, yeah, I mean, the belief from a market perspective that it is Trump 2.0, I think, gets stronger with this key swing state being called in his favor. I think we've got the management of JK Tyres now joining us. Nigel.
Okay, all right. Well, let's get straight to that then. JK Tyre, they reported a weak set of numbers. Higher input costs and supply chain issues weighed on the earnings. We had the gross margins as well that did see a decline. To help us out with the outlook from here on, we have with us Mr. Anuj Katuria, the President, India at JK Tyres and Industries. Hi, sir. Good morning and good to see you in. Thanks a lot for speaking to us here on CNBC-TV18. Let's address both those 2 points. the raw material basket cost has moved up. I think you had indicated as well it could move up by 5 to around 6%. So that was in quarter 2. For quarter 3, will it be flattish? Will it be lower? Could you give us clarity on that? Point number 1. Point number 2 is there are supply chain issues which you have faced. Are they now getting ironed out?
Yeah, as far as the raw material basket is concerned, in quarter 2, we saw an upswing, mainly led by the natural rubber and the synthetic rubber. The good part is that now we have seen that it has come down a little, but this also has to be watched very carefully. We are doing that, and we expect that in quarter 3, there would be some impact further because there is a carryover from quarter 2. But going forward, maybe December onwards, things should start softening, and the overall raw material basket prices should be in control. On the supply chain side, yes, there were some challenges in the earlier part of quarter 2. But September onwards, we have seen that the situation is much better. The availability of the vessels, the containers, and also, whatever we export into the Americas, for that, things are much better. And going forward, we expect that the situation will be similar, and there wouldn't be much of a challenge. In fact, if you take our quarter 2 numbers, in exports also we have been able to do quite well. And that has actually been quite helpful in offsetting some of the impact that was there because of the sluggish demand, especially from the OEMs.
Okay, so that's good news. If, RM issues will get sorted out by the end of the third quarter and supply side issues as well are getting sorted out, that's good news. What about price hikes? Could you quantify what are the price hikes you have taken so far in quarter 3 in comparison to quarter 2? And on a blended basis, how much higher will prices be?
So we have been continuously taking price hikes. Right from April, we started. So we have been able to, roughly, if I were to quantify it, say whatever has been the raw material impact for the year as on date, we have been able to take price hikes which are equivalent to almost 50%. But yeah, there it leaves the other part. But there again, we have taken another hike in the beginning of November. And going forward, based on the market dynamics, we will be looking at further hikes if they are required. But on the other side, we are also watching the raw material basket, and we will have to balance this out very carefully. And actually, that is how we play it out.
What does it mean in terms of margins? I'm looking at your India business, which is bulk of your total revenues. Out there, the profitability has got hit. So give and take everything, raw material basket cooling off, you have taken price hikes, supply chain issues as well getting sorted out. What does it mean on margins? Last quarter, it was in that vicinity of around 11.5%. How much better will it be for the second half of this year, quarter 3 and quarter 4?
So if you look at the EBITDA margins in quarter 2, we reported our EBITDA margin of 12.2%. Yeah, it is down as compared to the corresponding quarter. But if you take the total raw material impact, we have been able to kind of negate some of the, we have been able to sustain the margin mainly because of our efforts on product premiumization, better mix, operational efficiencies, and we also had a strategic buildup of the raw material when it was going up. So all this has been able to help us to sustain the margins in quarter 2. Going forward, we expect the margins to be better.
But how much better, sir? How much better? According to your calculations, around 12.2% for the past quarter. So can we expect it to improve, say, by 100 basis points in quarter 3? And by quarter 4, in comparison to what you have done in quarter 2, should it be another 200, 250 basis points better?
See, generally, we are looking at a range of 13 to 15%. That is what is the industry average. And we would definitely like to get back into that range.
So 13 to 15% is what you'd like to get back at on a full year basis. That's helpful, sir. It kind of tells us at least your aspiration level where you want to be. Similarly, as there's recovery in the second half, on a top line level, what kind of growth can we expect? Full year.
Even if you were to look at our quarter 2 results, while the overall top line it was muted. But in the replacement market, we saw a positive sentiment, especially in the PCR segment. We expect that the momentum in the replacement market will continue, and we should expect even in the commercial vehicle segment, the demand to be much better. Quarter 4 is generally a very good quarter because both OEM demand as well as the replacement market demand is robust. So overall, I think so. H2 definitely will be better than H1. A replacement market, we expect that we will be able to have a high single-digit growth in H2. For OEMs, we will have to wait and watch because there is this element which is there in the, especially in the CV segment, where the demand is still kind of not picking up. But we expect that once the infrastructure spends, which kind of got deferred because of the elections and also because of the delayed monsoon, extended monsoon. So with that now behind us, we expect that in H2, on the back of the infra spends, also on the passenger car side, the festive season has brought in a lot of cheer. So with the pipeline stocks getting clear to a certain extent, we expect that overall in H2, the demand both from the replacement market as well as the OEMs should be very positive.
Mr. Kathuria, we leave it there, sir. Good luck. Thank you very much for joining us, and hope to speak with you soon again.
Thank you.
We'll take a break here. Markets up 170 points. I just want to point out that US futures are at the session's high. Yields have jumped. Look at the front end of the curve, the 2-year, the 10-year, they're at the high point of the day or the night. I mean, depending on whether you're tracking them here or the US. This is all happening as results start to come through. I think that's a very helpful graphic which tells you what's happening. So it's a 14 basis point jump on the 10-year, with about 4.43. The 2-year is up lesser, and the dollar index is up about 1.5%. That is almost 105 on the US dollar index, which is coming through. I mean, that's going to be, traditionally, historically, a very strong dollar is bad for flows into emerging markets, especially, and of course, stuff priced in dollar terms, commodities, for example. But we'll have to see. This is still very, very early sort of reactions which are coming through, and some of this will start to percolate back and work its way through to our markets as well.
And the Bitcoin has called it.
75,000 on Bitcoin.
Harris or Trump, one thing we know for sure, they're all going to print and print. Lesser degrees, but I think that is, of course, one of the reasons why things like gold, Bitcoin, etc. have done very well. We take a break. The management of Swiggy, you don't want to miss that one. The IPO launches, and we'll have Sriharsha Maheti and Rahul Bothra, the MD and Group CEO and the CFO of the company, join us on the other side. Stay tuned. Well, Swiggy's IPO opens today. It's a household brand, needs no introduction in terms of what they do. The IPO targets 11,327 crore rupees through a combination of fresh issue worth 4,499 crore rupees. The IPO priced at between 371 to 390 rupees per share. We have Swiggy's MD and Group CEO, Sriharsha Maheti, and Chief Financial Officer, Rahul Bothra. Gentlemen, good morning. Great to have both of you here. Thanks for joining in. Sriharsha, if I can start with you. You'll have a lot of fresh capital with you. How do you plan to use it? Will it be used? Will you use it to regain some of the market share that you've lost in the food delivery business, or will the majority of it be used on the quick commerce side? Sriharsha, can you hear me? I don't think they can hear me.
Yeah, so I can take that. Good morning to you and all your viewers.
Yes, please, Rahul, go on.
Yeah, sure. So the primary proceeds that we are raising of roughly 4,500 crores, we are earmarking a large part of it to grow our quick commerce business. As you may have seen from our filings, our quick commerce business has seen a pretty steady growth path, growing at around 122% over the last 3 years. And we do expect to increase our dark store network coverage and also our geographical city coverage, with part of the proceeds. We're also going to use it to penetrate to more number of consumers. Over the last 3 years, we have added 60% more consumers on our platform. And some part of this proceeds will also be used on the advertising and sales promotion to penetrate more on the quick commerce business. The food delivery business itself has seen pretty steady growth. We are at a mature stage of the category. And we do expect to get a lot more organic users on that platform, which means the overall spending for advertising will be limited for the food delivery business.
Sriharsha, can you hear me now?
Yes, I can.
No, that was a very helpful answer from Rahul. But I just wanted your thoughts, Sriharsha, on this, on what you plan to do, because you have lost share to Zomato in the food delivery service. They are ahead on the quick commerce side as well. What is going to be the strategy? We'll get to the numbers in just a bit in terms of how when you turn margin positive, etc. But just your thoughts on both these segments and what you plan to do.
Hi. So firstly, thank you for having us both over today. I think what you mentioned is right. I think if you look at the 10-year history of food delivery, I think the last couple of years have seen us lose some share. And I think, however, in the midst of it, we've done a lot of improvements to our strategy execution, and we're starting to feel very good about where things go from here. I think this year especially has seen us do a lot of stuff on the consumer innovation side. I think we've been really hunkering down on doing more for consumers from an affordability standpoint as well as convenience standpoint. And that is one thing that I am sure will keep us in good stead as we go into the next few years. I think while Rahul mentioned that it is a mature category, I do think that we have multi-decadal growth ahead of us. And the key for us will be to really, lock down on our strongholds and continue to do more and more in terms of affordability and unlocking new consumption occasions for our consumers. And we're really excited about how it's all coming together now.
Okay, all right. Hi, good morning, gentlemen, and thanks a lot for making life a lot simpler for us. But now welcome to the stock market. So the market will want to understand what's your vision going ahead. Talking about the food business itself, margins are sub 1%. Industry believes it should go to around 5%. Do you believe that's likely to happen? And also, if you could give us an updated market share in the food business between y'all as well as Zomato.
So yes, I think the 1% numbers are right for the last quarter that we had published, and we absolutely do think that eventually the food delivery business will get closer to the 5% mark that you talked about. We've demonstrated that over the last couple of years with operating leverage kicking in and the unit economics as well improving at a steady clip. We feel good about our chances here.
And Sriharsha, if you can put a timeline to it to get to that around 5% number.
I think in our first earnings call, Prashant, you'll hear us start getting into a little bit more guidance in terms of the short term, medium term at this point.
Sure. Folks, hi, good morning, and great to be speaking with you. Rahul, if you could weigh in on this, because I think no one's doubting the disruption that both you and Zomato, your peers Zomato, have kind of unleashed, and it's here to stay, right? But I think the whole question is the whole path to profitability debate, and Zomato kind of displayed that quite nicely. So now let's talk profits. In terms of the quick commerce business, when do you become contribution positive? And also at a total company level, some idea, how many quarters down the line are we when we start seeing profits at the EBITDA level and eventually at the PAT level?
Sure. Let's talk about the quick commerce business. As you said, the contribution margin is a key KPI that we are all tracking. FY23 was a year of investment for us. We increased our network both in terms of number of stores as well as cities. And we had a negative 23% contribution margin in that year. Now, if you look at the FY24 numbers, that margin, contribution margin shrunk to -6% and further down to -3% in Q1, in which we have given our reported results. We will give a lot more specific guidance in our first earnings call. You will understand that there is an offer document out there right now. We are restricted from sharing specific guidance, which is not part of our offer documents. So we do expect to come back in our first earnings call to give you more specific color on both the quick commerce business as well as corporate level profitability.
Maybe not a number. I get that you're constrained, not asking for a number, but some time frame. I mean, rough time frames in terms of the road to profitability. Can we get that?
Yes. Sure. See, if you look at our trajectory in the food delivery business, right? FY23 we had close to 1,000 crore EBITDA loss, and FY24 that number came down to like close to break even. And Q1 we delivered the 0.8% positive EBITDA. So platform businesses are subject to a scale. So once there's a certain traction that you get after a certain tipping point, they do generate cash, and which we have seen both in our peer numbers, both locally as well as globally. So you should expect that platform businesses having turned the corner with the operating leverage at play, with the improved monetization as well as cost levers that we have at our disposal. There are a number of initiatives that we keep running on both the cost and revenue lines. Our operating fixed cost, has actually come down in the food delivery business by 13% over the last 2 years. So there's been a pretty good, I would say, management we have been able to do on the cost side. Revenue, our advertising business again has kicked off really nicely. Over the last couple of years, we have gained substantially both in the food delivery business and the quick commerce business. And if you take a forward view of the trajectory, we will share more specific guidance in our quarterly earnings calls.
No, absolutely. I got that. We have a bunch of other questions. We're out of time. So I hope Sriharsha and Rahul, you'll come back up with us when you guys make it to the market on the listing day, and we can talk more specific numbers. I think you won't be constrained then. Thank you very much, both of you, and good luck with the IPO. It's great speaking with both of you. Thank you. Well, I think we're going to take a quick commercial break here, and we're going to come back in a bit. 170 points, by the way, on the Nifty is where we are at. It's the economy with Lata on the other side, and she'll have Katrina L of Moody's Analytics and Stephen Englander of Standard Chartered on, of course, what else but US elections and the implications for global markets. Stay tuned.